All right, we're looking at a little bit of a rebound after the massive sell-off on Friday. 30 minutes until the start of cash trading. I'm Matt Miller. Dani Berger is off. Bloomberg Open Interest starts right now. Coming up, President Trump hails the historic dawn of a new Middle East as he visits the region to mark the Gaza peace deal. We'll have the latest from Jerusalem. Meanwhile, the U.S.-China trade tensions ease somewhat as the Trump administration dials back on Friday's hostile rhetoric, and Wall Street kicks off earnings season with JPMorgan vowing to funnel $1.5 trillion into industries that boost economic security for the United States of America. One stock that we're watching very closely this morning is Broadcom. It's the latest company to score a multi-year deal with OpenAI. Broadcom's going to build custom data center chips and networking gear that produce 10 gigawatts of compute capacity. It's joining the likes of AMD and NVIDIA in working with the AI superpower. Here at the desk to discuss the AI deal is Bloomberg Tech's Hyde. She joins us to talk about all that's going on in tech and specifically this breaking story, Caroline. So Broadcom becomes essentially, I think, the third company to make a big multi-gigawatt deal with OpenAI.
10 gigawatts. So just think 1 gigawatt is equivalent of one nuclear plant. We've got 10 of those coming online by basically 2029. But remember, Broadcom helps them design their own custom chips. This was already hinted at by Hock Tan when they had their earnings in the beginning of September. A new customer, $10 billion of orders coming online. And we managed to break at the time that that customer was indeed OpenAI. So now we get the articulation of what that 10 billion is going to give them. It's going to give them custom networking gear, custom chips. This is all about the fact that they want to be able to build with inference. This isn't about training OpenAI models. This is actually using them, deploying them, and learning from what ultimately, with the AI models that they build, how they can have even more efficiency, even more knowledge built into the chips that they build together with Broadcom. But as you say, this is on the heels of a 10 gigawatt deal with NVIDIA, where NVIDIA is actually going to be making their GPUs and investing equity into OpenAI. AMD came on board with a 6 gigawatt promise to be able to be giving them their own chips and, again, scaling out AI data centers. Another 10 gigawatts, but we know that Greg Brockman over at OpenAI is saying this is a drop in the bucket of the ultimate compute that we need. I think what's interesting here, though, Hock Tan's not having to give any money away.
That's what I was going to ask. I mean, NVIDIA had to pay OpenAI $100 billion. AMD had to sacrifice 10% of its company. What is Broadcom giving up to get this deal? They're just friends?
But this is also about Sam Altman being able to own his own destiny. This is someone who's able to build his own and design his own chips. So together, maybe he needed less incentive. This is about him winning out as well. For NVIDIA, yes, maybe we never know whether actually they're just being prudent over at NVIDIA and wanting to make a good investment, and the equity is going to be more valuable. With AMD, certainly they wanted this to be a win-win scenario, but the market has interpreted this as companies falling over themselves to give OpenAI their own infrastructure. Hock Tan's just been able to say, I'll help you with this deal, and $10 billion is seemingly what the amount was, what we really broke into at the beginning of September.
All right, Caroline, looking forward to your coverage of this on Bloomberg Tech. She co-hosts that show with Ed Ludlow, kicks off at 11. Could be preempted by President Trump in Sharm el-Sheikh today, of course. We have some breaking news on Salesforce. Speaking of tech, it's going to invest $15 billion in San Francisco over the next 5 years. Now, that seems pretty straightforward compared to the nebulous announcement we got from JPMorgan this morning. It will funnel $1.5 trillion into U.S. or U.S.-adjacent security products and processes and resilience, whatever that means. That includes rare earths, robotics. It includes probably AI as well. Joining us to talk about this is Bloomberg finance reporter Catherine Doherty. So JPMorgan making some, I guess pledge isn't really the right word, because there have to be real specifics in a pledge, right?
This is really a commitment, and it's a sign of where they want to at least signal the investments that they're making. And this could be direct investments, whether it's loans or facilitating financing on behalf of companies. Remember, you have many different arms of JPMorgan that can do this in various ways. So if you are the investment bank and you are helping with a equity fundraise or a debt sale, that is one way that the bank can commit to companies that are in the U.S. or U.S. adjacent, as you mentioned. But they can also help within their wealth arm and their asset management arm, helping their own clients get involved and invest their capital, putting their money where they say they want to commit, which is, as you mentioned, in the United States. Jamie Dimon has been very vocal about how he is worried that there has been a shift away from the U.S. and has always advocated for a commitment to domestic companies, and this also can come in the form of defense. That's another area that you did not mention, outside of AI, technology, and other U.S. commitments that would enhance security.
Right, defense, aerospace, but also energy production, also the energy grid. I mean, pretty much anything you could think of that you could link to U.S. security. And Jamie Dimon says this comes well, it delivers an extra $500 billion of what they already would have funneled towards U.S. defense.
That's right. This is a enhancement to what they already had committed, the $1 trillion. This is adding on the $500 billion to that. So it is not a new or evolving, didn't happen overnight. This has been something that has been long a commitment from the bank and, again, from its leader, Jamie Dimon. But we're just seeing really another kind of penny on top, sugar coating, as you will.
I want to ask quickly about something completely different. First Brands.
Yes.
Because the CEO is going to resign. He's going to be replaced by, I guess, the chief restructuring officer. But what does this mean for the embattled, bankrupt company?
So Bloomberg has been reporting out the various steps. This is not uncommon in a bankruptcy restructuring that you might see the old management team be replaced with restructuring officers, as you mentioned. So that's what's happening in this circumstance. What is unusual, or I guess noteworthy in this restructuring, is the investigation that is going on, that is going to look into the company's practices, and that also means the CEO's practices as a leader of this company, to see how the money was being managed, how the various fundraising and loans that they were having with different parties that extended far beyond what many of the core lenders, I think, even realized. Many were surprised at the end of the day, and that is all being worked out. So through that investigation, through the process, a new management team is going to be brought in. It is unlikely that that management team that you see today will be the management team that stays in place in the future. This is really a placeholder as this process is going through. But it's really a signal to the market to say, we want the company, and I believe that there was a statement along with the announcement that the CEO was stepping down, along the lines of, we want to ensure that this investigation is going through in a process that gives investors in the future of the company some assurance that there's the right management team in place.
So, okay, and I mean, still, we've had the allegation that $2.3 billion has disappeared, which is always concerning, especially if it's under your watch as CEO. Catherine Doherty, thanks so much for joining us. She covers finance for us here at Bloomberg. We're going to have more on this week's banks earnings with Stephen Biggar of Argus in the next hour, so we'll preview those big earnings coming due. You can see here President Trump, Jared and Ivanka Kushner there with Bibi Netanyahu. He is, I gather, finally leaving Israel, getting on Air Force One to go to Sharm el-Sheikh, where those peace deals are going to be signed. Netanyahu earlier this morning decided he was not going to go, although he thanked Egypt for the invitation. We're going to continue to bring you any updates we have on the president's trip in the Middle East and the potential for peace there after all of the remaining hostages were released this morning. To get back to what's going on in the markets, 20 minutes ahead of the open, stocks brushing off the U.S.-China trade tensions, well, somewhat brushing off. Remember, we had a 2.7% drop on the S&P on Friday. We had a 3.5% drop on the NASDAQ. So those trade tensions still built in, but maybe a little bit less hurtful now, as Beijing earlier had implemented stricter export controls, and then President Trump threatened to double tariffs on China to 100%. Yesterday, the president posted on Truth Social that, quote, President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. Many exclamation points. Bloomberg Washington correspondent Tyler Kendall has the latest. So, Tyler, the Trump administration backing down a bit now after getting pretty hostile on Friday.
Yeah, Matt. Well, it appears that President Trump has been hinting at this off-ramp. He told reporters earlier aboard Air Force One that November 1st, that effective date for potentially higher tariffs against China, is an eternity away, in his words. Keep in mind, November is also that enforcement timeline for those newly unveiled export curbs by China. So perhaps signaling to us that there is room for de-escalation on both sides. Still, the White House does maintain that that additional 100% tariff threat is on the table. And we also heard President Trump float that there could be new restrictions when it comes to the export of U.S. software and certain aircraft parts. We did get a statement yesterday from China's Commerce Ministry, which said that Beijing was prepared to retaliate, adding that China does not want a trade war, but it is prepared for one. Beijing also points to the fact that the U.S. Commerce Department implemented its own export curbs last month on certain advanced chips. So this is all sort of evolving here in the background, of course, as you well know, is that China really does have this grip on the global supply chain when it comes to rare earths. Accounted for 70% of global supply last year alone. So it's something that we're going to be to watch really closely, Matt. But I would say perhaps the most immediate impact is that it is casting potential doubt on that face-to-face meeting between President Trump and Xi Jinping that is set to happen at the end of the month on the sidelines of the APEC summit in South Korea.
All right, Tyler, thanks very much. Bloomberg's Washington correspondent Tyler Kendall there. We are not unlikely to hear from her again in the next couple of hours because we are getting headlines fast and furious as President Trump flies through the Middle East. Let's get a look at some of the other movers on our radar in terms of stocks this morning. Disney shares jump as Taylor Swift announces new content that will premiere on Disney Plus in December. And another check on what's going on with Broadcom following that multi-year partnership with OpenAI announced just 12 minutes ago. You can see Broadcom shares up more than 10%. It's going to be building data center gear and chips with OpenAI, and they're hoping to produce 10 gigawatts of compute capacity together. Bloom Energy and Brookfeild struck a $5 billion AI infrastructure partnership, and we're going to have more on Brookfeild throughout the program because it's also bought the rest of Howard Marks and Bruce Karsh's Oaktree. Coming up, President Trump declares the war in Gaza is over. We'll head to Jerusalem next. This is Bloomberg Open Interest. All right, President Trump has just boarded and is about to take off from Israel, head to Egypt. Let's get to Bloomberg's Oliver Crook right now in Jerusalem, where we heard a large number of speeches this morning, all of them quite long. Oliver, what do you make of what we heard from the president, from Netanyahu and others?
Yeah, we're really capping off really for the Israelis, a magnificent day. They all have been saying in their history, and the sort of hero's welcome that Donald Trump got here about 7 hours ago when he arrived in Ben Gurion Airport outside of Tel Aviv, where he's now about to take off, where he was welcomed by the Prime Minister of Israel, Benjamin Netanyahu, took a ride in the Beast from Tel Aviv into Jerusalem, went before the Knesset, the parliament within Israel, the first American president to be sitting president to speak before the Knesset since 2008 when it was George W. Bush, and really receiving massive applause, absolutely sort of being showered with praise for basically what the President of the United States has achieved over in very short order, something that seemed really kind of impossible 2 weeks ago, where on the same day that he spoke before the Knesset, the last remaining living hostages that were being held by Hamas were coming into the custody of the IDF and crossing back into Israeli's territory. The Speaker of the Knesset referred to this, that Trump will be remembered not just as an American president, but a giant of Jewish history, and will be be remembered for 1,000 years. And those were the kinds of remarks, and that is the kind of sentiment that you feel here in Israel over the last few days when we first got that announcement of the ceasefire at the end of last week. And even as I arrived here in Tel Aviv, as you're landing, before you even touch ground in Israel, look out the window. You see a skyscraper with an Israeli flag and an American flag beneath it. Thank you. The highway that paves, the direction from Tel Aviv to Jerusalem, the same highway that Trump would have taken. It used to be lined with Israeli flags. Now every third flag is an American flag, and that is really the sentiment today in this really historic day. Very short order, and that is going to be the challenge for the next few days.
What's the TikTok look like right now, Oliver, in terms of not in terms of the Chinese social media site, but in terms of when we expect things to happen now? Because Sharm el-Sheikh was scheduled already to have begun, and clearly the president hasn't even taken off yet from Israel.
Yeah, the timeline is certainly going to be delayed here. So what we expect is Air Force One to take off from Ben Gurion Airport here just outside of Tel Aviv really any moment now, and then fly directly to Sharm el-Sheikh, where, again, Trump has assembled a great many leaders from around the region and representatives from many of the Arab states, whether it's Turkey, Saudi Arabia, Qatar, Egypt, all of whom have been very involved within this process. But also, interestingly, Matt, a lot of the European leaders too, right? And many people, I think many within Israel, have quite a bit of resentment, actually, for many of these European leaders, whether it's Keir Starmer, Emmanuel Macron, who all fairly recently recognized the state of Palestine, but they're going to be in that meeting. They've started to talk about what kind of role they potentially could play in the support of reconstruction of Gaza. So those are going to be the conversations with those leaders. But again, I think that part of the problem here, Matt, is we have a 20-point plan. 20 points sounds pretty detailed, but there is a lot of detail still missing, and there need to be a great many different roles that need to be allocated, and there needs to be a commitment of what everybody is willing to do and what role they're willing to play. We heard from Donald Trump a little bit earlier saying that everybody wants to be a part of this board of peace, so-called, this thing that oversees governance in Gaza, but that still has not taken shape.
All right, Oliver Crook there reporting from Jerusalem on what is certainly already an historic day, a momentous occasion. We'll be flying you straight back to Paris to begin the Le Cornu resignation countdown this afternoon. Coming up, Nancy Tengler shares her top tech picks and discusses the likelihood of a market correction with us. This is Bloomberg Open Interest. Quick check on futures ahead of the opening bell. We're going to gain back, looks like we're set to gain back some of the massive amount of ground that we lost on Friday, the first sell-off of 2% or more since April 21st. We lost 182 points on the S&P 500. Right now we're up 80 on futures. Another check on what's going on with Broadcom following the multi-year partnership that it announced at 9 o'clock with OpenAI. You can see Broadcom shares up 9% in the pre-market. It's going to build data centers and chips to help produce 10 gigawatts of compute capacity with OpenAI. And the third such deal that we've heard since NVIDIA said it would invest $100 billion. We're back with the opening bell. This is Bloomberg. We are moments away from the start of trading. Looks like we're going to have a rebound on this Monday morning, a partial rebound. This is Bloomberg Open Interest. I'm Matt Miller. You can see futures are up more than 1% on the S&P, but we did fall 2.7% on Friday. So a massive drop as President Trump threatened to raise tariffs by another 100% on China. You hear the opening bell at the New York Stock Exchange. You've got FactSet ringing the opening bell. I think it's fair to say that in some respects, FactSet is a competitor to Bloomberg. The shares are down about 40% this year, down about 11% over the last 5 years in total return. If you look down at the NASDAQ market site, you'll see Exelon ringing the opening bell, one of the biggest utilities in the country, and they've had a tremendous return. They're up 25% this year. That stock has almost doubled over the last 5 years. One of the stocks that we're keeping a very close eye on today is Broadcom. This is the cash trade now, up almost 8% after Broadcom became the latest in a slew of companies to score a multi-year deal with OpenAI. They're going to build chips. They're going to build networking gear. They're going to try and help OpenAI produce 10 gigawatts of compute capacity, which is like enough energy and then some to power New York City. So it is a massive, massive chunk. Morgan Stanley, to get back to the broader market, sees a correction of 11% if trade tensions between the U.S. and China aren't resolved before the November deadline. Mike Wilson says the S&P 500 could drop as low as 5,800, but says that his bullish base case is strong enough to withstand this type of tactical trade escalation in the near term, as long as it eventually de-escalates. Laffer Tengler CEO and CIO Nancy Tengler joins us now, and we're hearing this from a number of strategists this morning. Max Kettner also says, Nancy, that this could be a buying opportunity, assuming that, these trade tensions don't continue to get worse, or assuming that they get better, rather. What do you think?
Well, I actually agree, Matt. I think we've said for a long time that we think we're in the early stages of a secular bull market, and so historically, every sale in a bull market is a bad idea. But as a portfolio manager, we have to trim them back. But usually, you get opportunities through volatility and corrections to add to very high quality names, which is what we were doing in March and April of last year, picking off the highest quality, best names in our portfolio. We kept adding during the period. So I think that's what you're going to want to do again here. We've already seen the art of the deal China style and the art of the deal US style meeting, and I think the rhetoric is much worse than the bite.
It strikes me that I haven't really heard many people talk about what would actually happen were China to stop exports of rare earth minerals. I mean, that would drive some industries, the automotive production industry, for example, to an absolute halt.
Yeah. And that is why ultimately I don't think it's going to happen, though if from a strategy standpoint, it would certainly stop a lot of industry in the United States, as well as just general consumer products and I'll just leave it there. So I think one of the things we have to think about is mining for our own. And there was a cobalt plant that was Jervois plant in somewhere in the Midwest, and it was 15 years, Matt, before they could get approvals. And every time they had to go back, it got more and more expensive. So they finally just shut it down and never did mine for cobalt. We have to change that if we want to remain globally competitive. But it's not just us that the Chinese would shut down. It's really the entire world. And so I think they've got to walk a fine line, because they're trying to build allies in the BRICS, and that would be a problem.
Let's get to some of the stocks that, you come on this show. We're grateful, Nancy, to hear from you as often as we do. And you talk about some of the stocks that you love, some of the picks on your list. Broadcom is often among them. And this morning we have a deal with OpenAI. They're the third company after NVIDIA and AMD to make this kind of deal to produce multiple gigawatts of power, hopefully. What do you think about these deals, and this one in particular?
Yeah, I mean, I think this deal is better than the other deals, certainly for Broadcom. And maybe it is true, I've said it, that Hock Tan is one of the best operators, but a joint venture deal is much better for Broadcom than giving away equity or having to invest in OpenAI. So I think, they're going to produce 10 gigawatts worth of GPUs. We're still trying to figure out where we're going to get all the power, but it is a joint venture. And I think in that regard, the $10 billion deal over 4 years is a good deal for Broadcom. And you can see it in the stock price. It's up much more than it gave back on Friday. So we're pretty excited about it.
In terms of getting the power, that becomes a huge issue. I mean, we've talked to some companies that are hoping to produce that through nuclear, although talking about something that takes a while to develop, nuclear is certainly one of them, regardless of whether you have regulators on your side. What do you think about power producers? Would you put one in your 12 best picks list?
We have one. I mean, we have an infrastructure name. We have Quanta Services in the 12th best. It's been a monster performer. We also just launched a strategy, Matt, of kind of the new frontier technologies that includes nuclear. As you rightly point out, it's going to take a while. I mean, we're certainly a far cry from the China syndrome, aren't we? I cut my teeth on that movie, and we all thought Jane Fonda was a heroine. But anyway, That may have changed somewhat in recent years, but but I do think so. We have quantum in there. We have nuclear. We have robotics, space, and then just overlaying on top of all of that is AI. And I think you do have to be exposed to those names. We have Constellation and Talon in there, for example, but you do have to be exposed. Because I do think that, again, this is going to continue for some times. I've drawn the analogy to the 1990s. This is not that entirely, but the productivity portion, the driving growth through productivity is super important. And, Mark Mahaney just published a piece that measured.
Looks like we have some connectivity.
Or EBIT.
Connectivity issues. Oh, sorry, we lost you there for a moment, Nancy. Let me just cut you off because we only have a minute left and ask you finally about something that you pointed out in your note. Did we lose her? Are we getting her back? No, she's lost. All right, someday we'll solve the internet connectivity problems as we head towards general artificial intelligence. Let's get a check right now on what's going on in the stock market and send our thanks, at least in spirit, to Nancy Tengler there of Laffer, Tengler, CEO and CIO. We're looking at some big gains. I mean, this would be a huge day of gains were it not for the fact that we lost 182 points from the S&P on Friday. So right now we're back. We've got 73 points of that back, a 1.1% gain. And it's not surprising to see you've got Broadcom among the biggest gainers. NVIDIA, of course, because of its size, right now up 13%. And NVIDIA has actually, in this bull market that became 3 years old on Sunday, NVIDIA has delivered 14% of the roughly 83% gains. Broadcom, because of its deal with OpenAI, adding 11 points today, up right now 6.5%. Apple, Tesla, Google, Microsoft, all these big names making up the rest of the group there. And you see JPMorgan right now up 2.5% after it pledged to funnel $1.5 trillion in the next 10 years to U.S. security efforts, essentially. On the downside, Philip Morris International is off 1.5%. It's not a huge company, so it doesn't take that much with it. Fastenal, Regeneron. So you see some smaller names here leading the losers, which is good for this rally, although Coke, Netflix, and Walmart are also down. Take a look at the sector breakdown at what's going on today after everything sold off on Friday, and you see everything coming back essentially today, with the exception of consumer staples, which is pretty defensive, so that's down there at the bottom, but you see the tech story right up on top. You see materials up on top as well, as you have commodities putting up some big gains today. Consumer discretionary right up there. I think Jonathan Farrow said it fantastically today. It's the Delta economy, and everybody thinks he or she is in group one. Coming up, OpenAI yet again expands its reach across the AI spectrum, this time with a Broadcom deal. More on that next. This is Bloomberg Open Interest. Time now for our top calls. Some of the analyst action in focus this morning. First up, Goldman Sachs upgrading Estee Lauder to a buy. The firm says it could return to sales growth in its September quarter. Goldman cites the attractiveness of the prestige beauty industry and stabilizing trends in China. Next up, Stubhub is getting several bullish initiations after its IPO last month. Analysts see advertising boosts from large events like the World Cup in the U.S. next year. The Evercore ISI analyst says Stubhub will be in a strong position to expand into the larger primary ticketing market. And finally, Micron is getting a double upgrade to a buy at BNP Paribas Exane. The firm also boosting its price target to a street high of $270 from what had been a street low of $100. The analyst sees 50% more upside and says we're in the early innings of a memory supercycle. Now, staying with the companies that will use that memory, OpenAI signed a multi-year agreement with Broadcom to collaborate on custom chips and networking equipment for what's planned to be 10 gigawatts of compute capacity. Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh, joins us here on set. You know, we throw around these gigawatts all the time. Yeah. I'm not sure everyone quite understands how much that is. That's enough to power Manhattan and then some, isn't it?
It is, and look, when it comes to putting a dollar number, it's anywhere from $40 to $50 billion for 1 gigawatt. So clearly, you know, we're talking about big investments. I mean, just to put it in context, hyperscalers spent about $400 billion this year in capex. So that's almost like 10 gigawatts of power capacity. But clearly, what OpenAI is saying is, if we have more power, that is going to result in much faster revenue growth. Because we have the models that right now scale enough and the inferencing demand is off the charts, that if we had more gigawatt capacity, that would translate into faster revenue growth, and that's what they're going after here.
So why, I'll ask you the same question I asked Caroline Hyde, why doesn't Broadcom have to pay up? Everybody else so far has had to pay OpenAI to get in business with them, right? NVIDIA, $100 billion. AMD, 10% of itself. And what does Broadcom bring to the table?
So look at Broadcom's largest customer right now for the AI chips. It's Google. Google GPUs make up more than half of Broadcom's AI revenue, which is close to $20 billion run rate. So that tells you OpenAI already has somebody in mind in terms of who they want to emulate when it comes to custom silicon. And what they're saying is Google has the lowest infrastructure cost when it comes to tokens and what it takes to run the AI models. Google has the lowest cost. They want to replicate what Google has done, and they're using the same vendor, which is Broadcom. So to me, the cost will automatically come down if you're getting chips from Broadcom as opposed to getting chips from NVIDIA, which has a much higher markup. And if we're talking $40 to $50 billion per gigawatt, the cost of a gigawatt with Broadcom will be almost 30 to 35 billion. So you're getting that marked down for the gigawatt cost because the cost of chips come down if you're using Broadcom, and that's the strategy here.
I gotta ask a question that my producer Will Shaker has been asking this morning, which is especially important for investors. Who's the next one to make a deal with OpenAI? Who's left?
I mean, you have Marvell and custom silicon too, but right now what we have seen is Google using Broadcom, Amazon and Microsoft are using Marvell, even Meta uses Broadcom for custom silicon. So you pick a custom silicon provider, but potentially they could go to Marvell as well.
And then Nancy Tengler was talking about, and you mentioned, we've got to power these, these chips, these data centers. Is there enough power to do all? So far, NVIDIA, 10 gigawatts, right? AMD, 6. Broadcom brings it to 26 total gigawatts with just those three companies. Who can power that?
Well, so that's where it's a multi-year project, and the longest lead times are in power right now. So forget about everything else.
How long does it take to get a nuclear power plant off the ground from scratch?
Well, I'm guessing in terms of getting the approval, the permit, and then getting things running, we are talking more than a year for everything, no matter what.
More than a year?
Yes.
I'm thinking like 10, right?
Well, I mean, look, because of the incentives involved here, things will speed up. There is no doubt in my mind that this will be highest priority because that's where all the dollars are, and everyone wants to chase, the hype and build while it lasts. So from that perspective, things will speed up. But still, you can't cut, all the lead times that are involved in sourcing the components, the permits, and getting things ready.
All right. Money is a fantastic motivator, but let's hope it doesn't come before our safety, right, Andy?
That's true, yeah.
Mandeep Singh runs our tech coverage for us at Bloomberg Intelligence. Coming up, Disney stock is getting a boost from Taylor Swift today. We'll give you the details with Geetha Ranganathan next. This is Bloomberg Open Interest. This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on what's going on with stocks this morning. A rebound after the massive sell-off we saw on Friday. The S&P right now up 1.25%. So gaining back about half of what we lost on Friday. The NASDAQ as well is up 1.8%. But remember, it lost 3.5% in Friday's sell-off. You can see the small caps coming back as well. In terms of the stocks that are moving, NVIDIA is obviously adding the most points. up more than $4 trillion company, up 3%, very helpful to the indexes. And Broadcom now up 9.5%. So a little fluctuation there between 6 and 10%, but it's right now at the top end of that range. MP Materials up 17%. This stock continues to climb as we continue to worry about threats to the rare minerals supplies out of China. Bloom Energy, we've been talking about all morning, up 21% with that Brookfeild acquisition. Warner Brothers Discovery, we haven't mentioned yet, but we're going to in just a second, doesn't like reportedly the deal that it's gotten so far from Paramount, and then Disney getting a boost from Taylor Swift. Disney Plus is going to feature the final show of Taylor Swift's Eras tour, as well as a 6-episode behind-the-scenes documentary of the historic tour in December. Bloomberg Intelligence senior media analyst Geetha Ranganathan joins us now to talk about this. And I don't throw that word around lightly, Geetha, historic, but this tour really was a record-setting tour. How much is it going to help Disney?
It's going to help Disney a lot, Matt. I mean, this is not the first time that Taylor Swift has, partnered with Disney Plus. She already had her first concert film, the original film out in March of 2024. And remember, Disney Plus said that that was their biggest ever concert film on their series. So generated something like 5 million views in just the first 3 days. And really, it makes, eminent sense. I mean, she really, her content really resonates well. It speaks to the Disney Plus subscriber base. And for Disney, it's a very, very calculated, very meaningful investment that helps them to basically increase their engagement with their current subscriber base and really reduce churn.
So Taylor Swift and Disney, one big piece of news today. We're also looking at the potential for Paramount to buy Warner Brothers. I thought, by the way, a fantastic interview at Screen Time of David Ellison. Lucas Shaw really delivering once again this year. Ellison didn't give anything away, but clearly, at least according to press reports, Paramount wants to buy Warner Brothers Discovery, and Warner Brothers Discovery so far, it said, not good enough, right?
Not good enough so far. So it looks like the initial, we've heard rumblings about this for a month now, Matt, about Paramount kind of being interested in Warner Brothers Discovery. There are a couple of things that are happening here. So Paramount actually just merged with Skydance. They really need a good go-forward strategy. Just Paramount getting together with Skydance is not going to cut it when it comes to, kind of making it big in terms of the media ecosystem. They need much more scale in terms of streaming, in terms of their TV networks, in terms of their studio. So Warner Brothers Discovery actually makes perfect sense, both from a strategic standpoint, from an economic standpoint. And so it makes sense that they're going after them. The other thing that we have to remember with Warner Brothers Discovery is that the company, even before any of these M&A rumors started, they are actually planning to split their company into 2 businesses. So the TV networks business, which is a no-growth business, and then you have the streaming and the studio, which is really a high-growth business. And, they think that this is really kind of going to drum up a lot of value and a lot of support for the company when that happens sometime in 2026. So it was important for Paramount to kind of get ahead of that split because obviously the value of those assets will rise, or at least that's what everybody seems to think. But this is going to be really a game of chickens. So we know David Zaslav is a very, very tough negotiator. He's obviously not happy with the price, which was probably $20 is what Paramount initially offered.
What's the ultimate size here of Paramount, assuming it does get this deal done? And does it face any regulatory pressure, or is that eased by the Ellison family's closeness to the Trumps?
I think it's definitely eased, just kind of given that they've already navigated this with Skydance. There is really no major FCC roadblock because there is no merger of broadcast stations or broadcast assets. So that definitely clears, one of the regulatory obstacles potentially. And yes, we definitely think, I don't think, regulatory concerns is really a major thing. If at all it's going to come down to anything, it's obviously going to be the price point and how they kind of get the financing done for the deal. So we already heard some rumblings about maybe getting private equity involved. So we've kind of got to wait and see how everything plays out here, Matt.
All right, Geetha, thanks very much for joining us. Geetha Ranganathan covers media for us at Bloomberg Intelligence. Let's get a quick check at what's going on in stocks. 25 minutes into the session here, we do see a 90-point rally on the S&P 500. We're up 1.33% after dropping 2.7% on Friday. Remember, that was the biggest drop, or the only drop we'd seen of more than 2% since April 21st. Sunday saw the anniversary of the bull market. We're now in a 3-year bull market. We're up 83% so far since October 12th of 2022. The Nasdaq adding back almost 2 percentage points today to 24,677, and the small caps are coming back as well. Coming up in the next hour, Franklin Templeton's Katrina Dudley joins us, plus Carlyle's global head of industrials, talking about their latest carve-out. And then Erik Hirsch of Hamilton Lane talks to us about SRTs, and I'm not talking about Dodge. This is Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller. Dani Berger is off on this day of, I mean, it's not a fantastic rally considering the drops that we saw on Friday, but we're clawing our way back. President Trump hails the historic dawn of a new Middle East as he visits the region to mark the Gaza peace deal. We'll have the latest from Jerusalem as the president flies to Sharm el-Sheikh. Meanwhile, U.S.-China trade tensions ease somewhat as the Trump administration dials back on the hostile rhetoric that it tweeted or truthed on Friday. And Broadcom is the latest company to score a multi-year deal with OpenAI. Investor Nancy Tengler of Laffer Tengler weighed in on the deal last hour.
A joint venture deal is much better for Broadcom than giving away equity or having to invest in OpenAI. So I think, they're going to produce 10 gigawatts worth of GPUs, and we're still trying to figure out where we're going to get all the power. But it is a joint venture, and I think in that regard, the $10 billion deal over 4 years is a good deal for Broadcom, and you can see it in the stock price. It's up much more than it gave back on Friday. So we're pretty excited about it.
For more details on the OpenAI Broadcom deal, we're joined by Bloomberg Tech's Caroline Hyde, and we've been talking about this, obviously, the whole morning, and I'm sure you and Ed will talk about it on Bloomberg Tech as well.
Ed's sick, sadly, so.
Okay,
Just
so we are sad for Ed.
We
I
are.
hope you get better soon. But in terms of this deal, it could be massive. 10 gigawatts of power, and Mandeep Singh was just telling me each gigawatt costs about $50 billion. So we're talking about a $500 billion deal. Of
the overall infrastructure.
Yeah.
But the 10 gigawatts of actual chips and networking gear coming from Broadcom is about $10 billion. That is what Hock Tan, the CEO of Broadcom, had given us the hint of in earnings in September. He'd said, I've got a new client, and it's about $10 billion for the next few years.
And so we
then realized
essentially
it was
knew
OpenAI.
this already.
We knew this was coming. What we don't know, like Nancy says, we don't know where the power's coming from. We don't know where the money's coming from OpenAI. So there's less of a circularity anxiety, more of a where is the money that OpenAI is going to be able to pay Broadcom for this.
Well, they've got $100 billion from NVIDIA. They could use a tenth of that, right?
Yeah, the parceling just keeps on going. And also, look, the more compute they get, the more they're able to do this efficiently, the more they're able to generate revenue from you and I. So there is, of course, a build it and they will come scenario here. But this is a whole chunk of independence also coming Sam Altman's way. This is perhaps why you didn't see any equity being turned over by Hock Tan, no money to sweeten the deal, because Sam and team want this. They don't want to have to be so dependent on NVIDIA, on AMD. They want to be able to design their own chips, such as Google already does with Broadcom, and bring it to bear and make it even more efficient by tailoring it to their own compute needs. This is about training the models they've already designed.
All right, very cool story, and I look forward to hearing more about it at 11. Caroline Hyde anchoring Bloomberg Tech. Let's continue the conversation with Katrina Dudley, Franklin Templeton Public Markets Senior Investment Strategist. Katrina, this is, I guess, the story, other than the trade story, let's put that on the back burner for a second. This AI story continues to power markets higher, Friday's drop notwithstanding. Do you have faith? Do you still have faith in this?
I absolutely have faith in AI. I just look at what we are doing to our own investment process within Franklin Resources, and I look at the ability of us to not just take the technology, but to productionalize it. And I think that that's the gap that McKinsey's been talking about, is the fact that you have all of these use cases, and they're not making it into production. We just showcased 4 use cases within our investment teams where we've been able to take AI and make our teams more efficient. And that's the start of what you're going to see. And it's those small little increments that you start with, and then you get that snowball effect. So we are bullish on AI, both within our firm as well as the investment opportunity, because we're actually investors into a number of these companies.
By the way, Nir Kassir on Bloomberg Opinion has a great essay pointing out that the comparisons of this AI, evolution or revolution to the tech bubble, to the dot-com burst in 2000 are unfair, because this is about driving earnings, right? And I saw this morning, DataTrek, Nick Colas says, in Q1 and Q2, we beat earnings by 8 percentage points in each quarter. And over the last 40 quarters, we've beaten by 5 percentage points. So can we do that again in Q3?
Yeah, let's just take a look, and you're exactly right. You're trying to find a point in history that it replicates exactly what happens. But history does rhyme, and I remember. And I'm probably a lot more experienced than most people. Before Excel, we had a pencil and an eraser. And when you wanted to change earnings numbers, you erased those numbers and you wrote in the new numbers. And Excel was this explosion of productivity. And I think you can liken what AI is going to do to our analysts, to our trading function, to our risk function, to our portfolio managers. And it's each of those functions and those unique roles that we have within investment management team that we're going to be able to get benefits from AI from. So when you talk about that translating into earnings, I think more efficiency really does make your cost structure more effective, and it means that you can broaden the gap between revenue and the cost growth, and that's what drives earnings.
But do we have to beat by 8%? I mean, do we have to have double-digit growth again in Q3 and Q4 for this to continue?
I think that the market is actually just expecting some degree of beat. You have to look at the valuation multiples where we're trading is above history. And secondly, you do need to counter. We have such a wall of worry out there. People are very cautiously optimistic. And I think that as I look, I think that there's more reasons to be optimistic than there are to be pessimistic. But those pessimists are going to need you to actually beat in order for things to continue to rise.
Let's pull up the China trade tensions, okay? On Friday, the president caused essentially a 2.7% collapse in the S&P, which is the first time we've seen a more than 2% drop since April. He's kind of walked that back, I guess, to some extent on Sunday. How much of a concern is this for you?
I think what you're actually seeing is the corrections happening faster. Last time it was a really long period between when we had the announcements and when we had them kind of walking back the narrative. Here already over the weekend, both sides are playing and kind of tampering down that narrative. So I think that to me shows that everyone here wants to make a deal and they want to get to the right answer. So I think that, yes, we had the reaction on Friday. I think that is really where the bearish sentiment kind of was able to overweigh those optimists out there, and you're now seeing that reverse this morning.
But there is a November deadline. I mean, the Chinese, if they stop the export of rare earth minerals, we have no alternative.
I don't think we're actually going to get there. I think that there's a lot of mechanisms, there's a lot of ways through stockpiling, through punting, and through pushing that deadline out. So I am not in that camp of let's be fearful that, come that deadline, things are going to turn off.
What else besides AI do you like in this market? I know in your note you mentioned manufacturing, and we hope to see that, coming back. It'll be interesting to see if the president can get Intel customers for its fab work.
Look, I think you're seeing a manufacturing renaissance, and I think part of that is due to supply chain issues, which are even predate the tariff issues. I think that there is a lot of automation and efficiency that's coming into the factories. They were automated before, but I think it's really accelerated, and AI will be able to continue, and machine learning continue to improve that automation, which means our factories of the future are much more capital intensive and less labor intensive. intensive, and the US there is relatively competitive. So I think that we're going to continue to have that manufacturing renaissance. What makes us very bullish about this market is if I look at the last few years, the market has just been driven by so few stocks and the performance of those. And what we've started to see, and we've highlighted really since the beginning of the year, is this broadening out. And if you look, all 11 sectors of the S&P are doing well, and that's a good thing. So it's actually kind of sharing the joy and sharing the positive amongst like a broader range of companies, and that's good.
So how much longer can this last? I mean, Sunday marked the 3-year anniversary of this bull market. We're up essentially 85%, including today's gains. How long do you expect it to go on?
I think that the market can continue to work because we've got earnings growth, and it is earnings growth that drives markets. So you started our conversation and talking about beating earnings, and you talked about efficiency, and they're two of the things which are good for earnings growth. If you combine that with a kind of tempering of interest rates, we're looking at over 90% probability of 2 rate cuts even before the end of the year. So you have a lot of tailwinds to earnings. And earnings growth are what drives markets. And whilst the valuations are expensive, you could probably, well, not expensive, but they're on the higher
23
things.
times.
Yeah, it's what is the definition of expensive, I suppose. But I think they're on the higher end of things.
The 10-year average is closer to 17.
Yeah, but the fact is, for a lot of the stocks, they're trading closer to that average. The 23 is really disproportionately representative. So what you'll have is earnings growth. You can have a tempering of that multiple, but the market continues to work. And as long as it continues to broaden, we continue to be optimistic.
Katrina, great having you in the studio. Thanks so much for joining us. Katrina Dudley there of Franklin Templeton. Let's get a check on what's going on in these markets. We get a rebound from the big drops we saw on Friday. Incidentally, we didn't hit the 50-day moving average on the downfall Friday, and it's been 113 trading days since we have. That's the third longest stretch since 1990 that we hold above that. So the question is, do we test it, or was that it? S&P 500 adding 95 points back at the 182 that it lost on Friday. NASDAQ adding 2% back. It lost 3.5% on Friday. Broadcom now up by more than 10% on this deal with OpenAI. Let's get a look at some of the single stocks moving this hour. Other than that, I think interesting. I've been saying nebulous, but really fascinating story. JPMorgan announcing it's going to funnel $1.5 trillion into industries that boost U.S. security and resilience. That includes rare earths, robotics, energy technologies, and a number of defense and aerospace projects. So it'll be interesting to see what that actually turns into. Warner Brothers Discovery rebuffing reportedly Paramount Skydance's initial takeover approach. Sources telling Bloomberg that Warner Brothers rejected the offer of around $20 a share for being too low, and you can see the shares are up another 5% at $18. Taylor Swift announces new content for Disney+. I would have expected a bigger pop given the importance of Taylor Swift. There was a time when we talked about the Eras Tour moving national economies. And we will now see a docuseries on Disney+, or we will in December, called The End of an Era, according to a social media post made by Taylor Swift earlier today. Coming up, Caryle is set to take over BASF's coatings business for $8.9 billion with a partner. We're going to discuss with Caryle's global head of industrials, Martin Sumner, how he has learned and perfected this approach of carving out units from big companies and making a profit. This is Bloomberg Open Interest. Let's get now to high interest and look at what's making headlines around the world. President Trump hailed an historic dawn in the Middle East after Hamas freed the last 20 living hostages and Israel released 2,000 Palestinian prisoners. The president arrived early this morning in Israel, met with Prime Minister Benjamin Netanyahu and families of hostages captured on October 7th, 2023 in that Hamas attack. Trump is expected to land now in Sharm el-Sheikh, Egypt, shortly, where he will meet with a bunch of global leaders to celebrate the deal that could bring an end to a devastating 2-year war. 3 economists have won the 2025 Nobel Prize for explaining how innovation drives economic growth through creative destruction. Their research links breakthroughs from the industrial revolution to the era of AI. The winners hail from Northwestern University, the London School of Economics, and Brown University. And Brookfeild is close to buying the remaining 26% of Oaktree Capital for about $3 billion, valuing the credit giant at about $11.5 billion. It cements credit as a core growth engine for Brookfeild and expands its U.S. footprint to over $550 billion in assets. The deal is expected to close early next year. And don't worry, Howard Marks is going to retain some equity in the company. Now, turning to another deal in the private equity space, Caryle has agreed to take over BASF's coatings business, creating a standalone company worth $8.9 billion. It's Carlyle's 16th carve-out in 20 years, and that's maybe twice as much as the next biggest operator of this kind of strategy. Joining us now is Martin Sumner. He's the global head of industrials at Caryle. And Martin, this is very cool for me because I care a lot about automotive, and paint is such a huge part of that. But also because you have, over the last couple of decades, perfected this strategy of carve-outs. Talk to me first about what you're doing here.
Perfected may be aggressive, but it's certainly...
True. Okay, sorry. I didn't mean... You've learned and, let's say, refined this strategy.
You know, it's been core to what we've done in our industrial practice. You mentioned 16 large carve-outs in the last 20 years. And really, there is an art and a science to it, because it's taking the vision of a big company and pulling it out and untangling it from the parent, providing all the functions and standing it up as an independent company. There's a lot of risks, but there's a lot of opportunity as well.
And it's a lot of work, and you, I imagine, accumulate a lot of air miles, right? You and your team essentially move to these places for a long period of time to do these deals.
You know, the diligence process is intense, and there's a lot of travel involved. And then once you sign the deal, there's a period between sign and close where you're active with the corporate seller, so you're ready day one, and then working with management starting day one to really get set on the right path as an independent company. It is a lot of work. We don't run the business, we rely on management, but we're definitely a good partner.
So in this deal you're working with, you've got some partners, the Qatar Investment Authority. BASF is going to keep a stake in this business. By the way, what does that say about this, that BASF wants to keep a minority stake? Well,
you know, BASF came out and determined this was not core. They were going to divest, but they really believe in the business. And it was important for them to pick the right equity partner. And we're excited for our partnership with them. It makes the transition a lot easier in terms of getting to an independent company. And BASF's a great organization, great brand, and a lot of OEM relationships that we look to continue.
So what is the actual product here? I mean, I am a car buff. I like to buy and sell motorcycles, and paint is a huge piece of that, but not necessarily of the cost for the manufacturer, right?
Yeah, so we have 3 different divisions in coatings. There's automotive OEM for new cars. There's refinish when your car gets a ding or a dent and you want it to look exactly like it did before. And then there's surface treatment, which is serves a wide range of industries. But the OEM, it's hugely important. This is a highly technical product. It really matters to consumers both on durability as well as the look. You know, it takes up about 30% of a assembly factory space, but it only represents 1% to 2% of the total cost. But it's really, really important to the durability and the look.
So what are the other deals that you've done? Axalta, I know, is one that sticks in my news brain. But you did a plating business as well in Berlin. What are the big ones?
So Axalta is a competitor to the BASF coatings business. So this is an ecosystem we know well from over a decade ago. Atotech was a specialty chemical plating business that goes into General Metal as well as to printed circuit boards. And we own a specialty chemical company called Nourion, which we bought from Nobel in 2018. So we've played in this ecosystem, and we really like the dynamics. It's not a very volatile industry. It has growth potential, and we're really excited to partner with QIA, BASF, and management to grow this business.
So when you buy these companies with that conglomerate, how long do you hold them? What's the exit look like?
Well, you know, the one thing about this business is we think it's such an attractive business. There's a lot of different alternatives. Maybe a strategic wants to buy it. We think it'd be a great public company. Or there's certain divisions that a lot of strategics have expressed interest in. So we're not sure. But ultimately, once we get in and really grow the business, we think the exit alternatives will develop, and there'll be many.
So how long do you then stick around? How long are you hanging around in Germany until you move on to the next?
Well, we have a philosophy of cradle to grave. So the deal team, led by Tanaka Mushashwe, who did this deal, will be with this business as long as we have an investment. And generally, we model 5 years, but it can be 5 to 8 years on average. Sometimes it's a little earlier or quicker if things go exceptionally well. It could be a little bit earlier.
But what about you, Martin? I mean, do you already have your eye on something else? Are you always looking for a potential carve-out?
I'm fortunate that I have a couple partners in our industrial practice that cover capital goods, that cover services, cover process industries. So, yeah, we're always looking for things. We're looking for the next good deal, the next great deal, the next carve-out. But I'll be spending a significant amount of time on the board here and headed to Germany next Monday for meetings with BASF and QIA and the team to talk about transition. So I'll be spending a lot of time, but you always need to find new deals.
All right. Great having you on the program. Thanks so much for joining us. Martin Sumner runs that carve-outs business for Carlyle. Still ahead, or the industrials business, I should say, for Carlyle. Still ahead, a conversation with Erik Hirsch, co-CEO of Hamilton Lane, one of the largest global investors in private capital. We're going to talk to him about SRTs. How do you shift risk, and how well will that work if it comes down to needing that capital? This is Bloomberg Open Interest. All right, take a look at what's going on with the S&P 500 after the massive sell-off on Friday. We were down 2.7% here. We were down 182 points. We're now gaining almost 78 points back. So, not quite half as much, but better than a stick in the eye, as my first stockbroker used to say. Broadcom, the biggest gainer and the biggest point addition. That's a huge move because typically NVIDIA is always on the top of one side or the other. You can see Amazon, Microsoft, Tesla also gaining. On the downside, you have not only pharma with Eli Lilly, but look, Philip Morris, Procter & Gamble, Johnson & Johnson, Coca-Cola, these are all consumer staples. And if I move over to the industry groups that are moving, you can see consumer staples is essentially the only loser here. Okay, healthcare is unchanged, but everybody else is gaining, from IT, consumer discretion, communication services, which is essentially the hyperscalers, materials, industrials, all up. Only consumer staples on the downside. Coming up, we're going to discuss the outlook for private markets with Hamilton Lane co-CEO Erik Hirsch. We're going to talk about transferring risk. How possible is that in size? This is Bloomberg Open Interest. President Trump arriving now in Egypt. He is set to participate in a Middle East peace ceremony in Sharm el-Sheikh. And as Bloomberg's Oliver Cook has told us, this will help, at least in some way, to some extent, determine the fate of Gaza. Who is running this peace process? Oliver joins us right now from Jerusalem. Oliver, last time we talked to you, the president was taking off. He'd just spoken at the Knesset. He was in Israel to witness the release of the 20 remaining living hostages. What do we expect from him in Sharm el-Sheikh?
Yeah, that's right. We have the Air Force One who appears to have just landed on the tarmac there in Egypt. And I think I saw some shots there of the president of Egypt, al-Sisi, who may be greeting him. Then this will be the second head of state, if it is in fact him, that will greet President Trump on the tarmac, which, of course, the first was Prime Minister Benjamin Netanyahu when he arrived in Tel Aviv at about 9 a.m. Local time here. That was about, 8 or 9 hours ago, and has, held all of his meetings here, has overseen, a speech over the Knesset, and met with a number number of different people, whether they are from the Israeli delegation to hostage families, and is now headed to Egypt to begin what is I guess, the second chapter of this sort of peace process, as Trump would like to call it a new dawn for the Middle East. Whether or not it is, in fact, a new dawn to the Middle East will come down to what can be arranged among a number of the leaders and the emissaries that Trump will be meeting with a little bit later today. They are going to number a number of Middle Eastern leaders. There are going to be emissaries from Qatar, from Saudi Arabia, from Turkey and Qatar, who were absolutely instrumental in applying the requisite pressure required to bring Hamas to this deal to begin with, but also bringing leaders from across the world, from some from Southeast Asia, and also critically a number from Europe. Emmanuel Macron, Keir Starmer, Pedro Sanchez, as well as Giorgia Meloni, people who have not really had an active role in the negotiations and bringing to the table. And we should say that many of whom the Israelis are quite upset with for recognizing the state of Palestine, now are trying to find places where they can kind of help shape this process. And Matt, really the key here is what is going to be the governing structure that sits on top of Gaza, this so-called technocratic Palestinian-led system that will be overseen by the so-called Board of Peace, which will be chaired by Donald Trump and potentially a number of the other leaders he'll be working with today. And that will all help to determine what this looks like going forward for Gaza, what the security arrangement's going to be. And of course, key to all of that, one of the big unanswered questions today, because of course the Israeli war aims were twofold. One, to bring back all the hostages. That is now complete. The second, to either completely eradicate or disable Hamas. That is not yet complete, and that is going to be a major part of the discussion going forward.
All right, Oliver, thanks very much for your reporting. Bloomberg's Oliver Cook, they're reporting from Jerusalem. We will continue to bring you any headlines, of course, as they come across on this historic day. Turning now back to Wall Street, Bank of America is planning a significant risk transfer, or SRT, tied to the $3 billion of loans to private market funds that it's got on its book. Joining us now to explain what this means is Bloomberg's chief Wall Street correspondent, Sri Natarajan. And Sri, importantly, Bank of America is looking to transfer some of its risk to investors.
Think of it as a bank buying insurance on the loans that it holds on its books. These trades that are called SRT, significant risk transfer, sometimes known as synthetic risk transfer, credit risk transfer. Instead of selling the loans that they've made to other investment firms, they keep the loans on their book, but they strike a contract with the other side saying, if you protect me on losses, typically about 10% on these loans, the first loss, I will pay you a risk premium. The benefit here is the bank then gets to free up some of the capital it has held against these loans, and therefore enables it to make more loans or perhaps reduce its concentration risk, whereas the investment firm on the other side is able to get a sweet risk premium, so is able to lock in some fees for the risk it's taking on for insuring against the first 10% loss on that loan book.
So these are essentially lines of credit. Bank of America is opening a line of credit with an investor or a group of investors that it can then tap in case of emergency with its own investments, right? But what happens if there's a great financial crisis? And
so, I mean, look, that's where some of the risk also comes in. You have to be careful about what loans are in that reference portfolio. This is, at the end of the day, the credit investors who are willing to take on this insurance, who are willing to protect the bank against the first 10% default rate, which against a pool of loans is fairly good, because in a good environment, the default rate is 2 to 3%. In a terrible environment, it perhaps doubles, maybe doubles again, but doesn't get much worse than that. So if it's a diversified pool of loans, you're good. But you still have to be careful about doing your own study on the underlying loans in that portfolio. And that's where the risk comes. As that market expands and explodes in size and there is greater investor demand, you go away from people who are credit pickers, who know what they're looking at, to people who are getting into it more on a quantitative basis, algorithmic basis, are modeling the risk. That is when the worry comes in that you're not really doing the underlying study that's required to make sure that you're protected in the case of a severe recession, and just run the risk of having higher losses.
All right, Sri, thanks very much for joining us to walk us through what an SRT is. Bloomberg's Sridhar Natarajan covers the banks for us here at Bloomberg. Joining us now is Erik Hirsch, Hamilton Lane co-CEO. Hamilton Lane is one of the largest private markets investment firms across the globe. And it's not just Bank of America, it's Morgan Stanley that's also apparently buying some insurance on some of its loans. Erik, are you one of the people who's extending these lines of credit?
We're not. And Matt, great to be with you. So I think it's interesting. There's a lot of talk about sort of a private credit bubble that's sort of hanging out there. And yet when we actually start to see the problems and see actually who's been doing some questionable lending, it's not the big private credit firms. It's much more of the banks. So I don't find it all that surprising right now that what we're starting to see is the banks reassessing their lending practices and reassessing what kinds of positions they want to be maintaining on their own portfolio.
Well, and we've seen lately some pretty high-profile problems, right, with Saks, with First Brands. There's a lot of debt that you may not have expected, 50%, 60%, 70% drops from, but it's been happening. Are we seeing cracks in credit?
I don't think we're seeing cracks in credit. I think what we're seeing is some questionable lending practices by some folks that don't, frankly, have the same resources and skill sets to play in the game. So First Brands is a great example. You look at who the big players were, the big lenders in that. They were not the big private credit firms. You did not see the Ares, Apollos, KKRs, Blackstones. They were not playing in that company. It was, in fact, much more bank-oriented and hedge fund-oriented. So for us, this is simply a question of be careful who your partners are. There are a tremendous number of people providing capital into the market. There's no shortage of capital. And I think investors just need to focus on who they want to back, who they want to partner with, because I don't see a sort of substantial problem with the sector or the industry. What I see is variation, not surprisingly, across the actual individual players.
So what do you think is happening in these individual situations, and how wide will the ripples spread of something like a First Brands?
So I don't see a big ripple. I think what we see today is equity to borrowing ratios look relatively conservative. Overall leverage levels are looking fine. We're not seeing a high level of default in the market. And so I think these are much more episodic, which is, again, not surprising, happens all the time that you've got a bad borrower or a bad lender or a bad combination. But that, to me, does not translate into some systematic or systemic risk across the entire sector.
All right, so we have big bank earnings coming up over the next few days. You don't think we're going to hear anything about, Tricolor or Saks from these banks? It's not going to be big enough to affect their earnings.
I don't see that, no. And I think if you sort of counterbalance that with what's been actually pretty positive, you've had a pretty robust IPO market for the last few months. The banks are doing well in the wealth sectors as that industry continues to grow and thrive. Overall equity market performance has been good. So no, I wouldn't think that what we're seeing here is going to warrant any sort of hit to earnings.
And M&A has been, $1 trillion of deals in the quarter. It does feel like there's a lot of, Friday notwithstanding, energy back in these markets, animal spirits back in these markets. IPOs are happening again, as you mentioned. What's your outlook?
Well, I think we're going to continue to see more of this. So again, absent some huge trade war with China, which is certainly a possibility, but I think what you see is the public market is looking for more product. There's real pent-up demand there. The private markets have a lot of high-quality companies that are looking for liquidity and looking for an exit. And so I think that pipeline could stay strong for a while.
What do you think the future of investing for retail looks like? Because as you mentioned, there's not a lot left to access in public markets. In private, everyone's reaching for that special sauce. So are we going to be able to, retail investors, for example, invest more directly in private markets?
Absolutely, Matt. And so you're already seeing it. The number of products that are now available to the retail customer has never been bigger and continues to grow. And I think right now it's not so much even the retail investor looking for a return. I think what they're looking for, and frankly smartly, they're looking for diversification. So if you take the average enterprise value for the public companies around the world, it's literally $100 billion. You look at the average enterprise value for what sort of the private markets are focusing on, $2 billion. So part of this is simply accessing part of the economy that's a big driver of the economy, which is small and medium-sized businesses. Those are not publicly traded. Those exist only in the private markets. And so if you're looking for a well-balanced, diversified portfolio that's getting access to all of the economic drivers, you're going to need to have exposure to the private markets. And that is just the reality.
So will retail investors need more transparency, a better look into these private companies, or will they simply need to have a strong fiduciary representative?
I think it's going to be both. I think what you're seeing is transparency is on the rise, as it should be. And so the SEC and other regulatory entities are very focused on making sure that the retail investor is protected. And at the same time, we need to see education levels of what private markets are and what they are not. As you know, there's a lot of myths around the private markets. And so getting people's educations higher, having access, having transparency, all of that is here. All of that is continuing to evolve and grow. I think it's all a good thing. I think it's natural. I think it's an expected part of a maturing asset class. And if you're bringing in this new big segment of an investor, I think it's to be expected.
All right, Erik, great to get some time with you across a broad swath of topics. Erik Hirsch there of Hamilton Lane. Let's get a check on what's going on in markets. An hour and 11 minutes into the session right now. We continue to see gains, of course, after the big drops that we saw on Friday, now clawing back 90 points of the 182-point drop we had on Friday. The NASDAQ back up 1.9% after the 3.5% drop we saw on Friday. Let's get a look at some of the... as a reminder, it is Columbus Day, of course, so the bond markets are closed. If you're wondering why aren't they showing us treasuries, that's because the bond market is closed today. Let's get a look at some of the single stock movers at this hour. Broadcom is the latest company to score a multi-year deal with OpenAI, and that's boosted the shares more than 10%. The two are going to try and build out together 10 gigawatts of compute capacity. Bloom Energy and Brookfeild striking a $5 billion AI infrastructure partnership. The collaboration will include a site in Europe set to be announced before the end of the year. So those shares, massive gain there of 26%, as you'd expect. Beyond Meat, shares in the, do you call it fake meat? Is that not, that sounds pejorative, but the alternative meat? That doesn't make any sense. Anyway, Beyond Meat falling after the company said nearly all creditors had accepted a debt swap that will lead to a substantial dilution of shareholders, and the company loses half its value in one session. Coming up, Wall Street kicks off earnings season tomorrow. We'll take a look at what to expect with Stephen Biggar of Argus, Director of Financial Services Research there. And President Trump has arrived in Egypt, where he'll be attending the Middle East peace ceremony with other global leaders. We'll get a live report later this hour as we watch the beast cruise down that highway. This is Open Interest. Third quarter earnings kick off this week, headlined by the banks. JPMorgan, Goldman Sachs, Wells Fargo, and Citi all report tomorrow. Then we get Bank of America and Morgan Stanley on Wednesday. For a look at what we can expect, we welcome Stephen Biggar, Argus, Director of Financial Services Research. Stephen, great to have you on the program. I guess, you know, what we've been saying for a couple weeks now is this was a banner quarter for M&A, $1 trillion in M&A. This has been a great quarter for IPOs. It looks like they're coming back to some extent. And for trading, what we saw from Jefferies has to augur well for these other banks as well, right?
Yeah, I'd agree. Really, this is an 8-cylinder quarter for banks. If you look across the board, particularly for capital markets, right? You mentioned merger activity and IPO activity. Of course, merger activity is a slower spool in terms of revenues, right? So the activity that's announced, the deals that are announced, they won't see revenues from that for, you know, about 3 quarters down the road. So this is a longer term improvement and a kind of a spool up of that activity that will result in better revenues down the road. But certainly the conversations are much more constructive. We expect a lot of commentary about that, and that by itself should should help the bank stock prices and justify some of this, you know, fairly healthy increase we've had versus the market for banks in general.
Yeah, I was going to ask. I mean, just because the banks do well tomorrow doesn't mean the stock necessarily rises, because investors may already be counting on that and buying the shares ahead of time. What does the valuation look like for these banks?
Well, I think there's a lot of things in banks' favor right now. This outperformance that we've had, I would attribute it to a couple of things. I mean, first is you mentioned rebounding capital markets, and again, that is not a one-quarter phenomenon. This is now 9 quarters in a row of increased activity throughout. So that's a really good sign looking forward. You've got this a little more constructive interest rate environment, which is helping. As well, we get the last Fed rate decrease we had was a little bit late in the quarter to really have any impact on the third quarter, but we're looking for a little improved loan demand as we go forward, and of course lower interest rates help on the margin for loss provisioning as well, credit quality. So that's a better aspect for banks. And then lastly, we haven't seen the end, I think, of this lower regulatory burden. That banks are expected to, be in a better environment moving forward with the new administration taking a new look at capital requirements and kind of softening those rules that we thought at one point would be pretty hard on banks in terms of the Basel III endgame rules. So less capital set aside as more money they can loan out or used for buybacks and dividends.
Stephen, what about the consumer? John Farrow on Bloomberg Surveillance earlier said we're in a Delta economy and half of us think we're in Group 1, but obviously that is not the case. How does the consumer look to you right now?
Well, that's certainly true. This dichotomy of high net worth and the lower income streams. The higher salaries and net worths are certainly carrying the economy for the most part, according to the stats. So I think that continues. There's a lot of wealth effect, right, as housing prices stay elevated, as the stock market reaches new highs throughout the year. That makes folks that are asset holders feel wealthier and able to spend more. And difficult at the lower end, given the inflation has of course ticked down, but the prices for things are certainly much more elevated than they were, say 3 years ago. So yeah, I think that continues. I don't think that's anything new in terms of the overall construct. I'm a bit more worried from the consumer standpoint on the unemployment picture. We do have a softening labor market. Unemployment has ticked higher just a bit here. I think banks will probably be a little bit more conservative on loss provisioning here as they talk about the go forward and a little bit less favorable employment environment. So they will probably be a little more cautious on loss provisions, but I don't expect a big uptick by any means either.
All right, Stephen, great to get your take on these banks. We look forward to the kickoff tomorrow. Stephen Biggar there of Argus on what is a slew of earnings due on Tuesday. Coming up, President Trump lands in Egypt, where he'll be attending the Middle East peace ceremony with other global leaders. We'll get a live report next. This is Bloomberg Open Interest.
Generations from now, this will be remembered as the moment that everything began to change, and change very much for the better. Like the USA right now, it will be the golden age of Israel and the golden age of the Middle East. It's going to work together.
That was President Trump addressing the Israeli parliament earlier this morning. The president has arrived in Egypt, where he'll be attending Middle East peace ceremony. Let's go now live to Bloomberg's Oliver Crook. He's in Jerusalem. And Oliver, I guess the important thing here is to, one of the important issues, there are so many, but one of them is to figure out who's going to be running this peace process and watching to make sure that, the train stays on the rails here.
Absolutely, Matt. I mean, I think the first goal is really to mark the moment, because there's no sort of doubt about the fact that the significance of what Trump has achieved in basically under a week, something that was inconceivable 2 weeks ago, bringing everybody to the table, bringing a ceasefire, bringing back the hostages, releasing Palestinian prisoners, and now having serious discussions about what the future of Gaza and the potential Palestinian state look like, has brought extreme joy, not just across Israel, which has been very self-evident, evident by the welcome that he had here across the nation, really really welcomed as a hero, but also within Gaza, where for the first time the last few days there have been no gunshots, no bombing. All of that has come to a close, and hoping that this is the sort of end of that chapter. Now, the joy of the end of this chapter maybe conceals a little bit of the bitter complexity of the chapter still to come. And as you say, Matt, that chapter opens right now as we speak in Egypt, with President Trump standing aside President Sisi in order to start to work out the questions of governance within Gaza, security within Gaza, and then the ultimate question here, what is the future of Hamas, a future in which, according to Trump's plan, has no plan within it that can include Hamas.
All right, Oliver, thanks very much. Really appreciate your coverage today from Jerusalem. Bloomberg's Oliver Crook. That does it for Open Interest. We'll continue our coverage of President Trump from Egypt. This is Bloomberg.